If you've been at Microsoft for 10 years, you've been accumulating shares the whole time, if you've left them in your Fidelity account, you very well have a six-figure tax bill looming when you decide to use that, whether that's retirement, buying a cottage, putting your kids through school, whatever it may be, you've got 6 figures of tax. The travesty of it all is for a lot of people that could have been avoided.
I want to touch on one more nightmare, and that is around RSUs and what happens when they vest. Who would like to take that?
RSUs, when they vest, that amount is treated as ordinary income.
Okay.
This is the number one complaint or frustration that our tech professional clients have. It's why are they getting taxed so heavily? There's really nothing that they can do about that tax withheld at source. So for most of you, 50% or a little bit more of those RSUs are lost to tax right away. Our big complaint, which Jerome can expand on, is tech professionals are not doing anything with their shares after they vest and they get into that Morgan Stanley or Fidelity account. Right. Tremendous opportunities, but time and time again, we're seeing these brilliant individuals not take advantage of it.
Yeah, we've had clients that have accumulated so much of their company shares, Microsoft, Google, Amazon, whichever company it may be, and they're really proud of building that nest egg, right? They got skin in the game, they're invested in their company, and it's a really good feeling for them.
And also those shares have just rocketed in value.
Yep.
Right?
Yeah, for people that have been there a long time, I mean, and that's the good part, but it's part of the problem as well, Brian. So if you've been at Microsoft for 10 years, you've been accumulating shares the whole time through RSUs or the share purchase plan, if you've left them in your Fidelity account, you very well have a 6-figure tax bill looming when you decide to use that, whether that's retirement, buying a cottage, putting your kids through school, whatever it may be, you've got 6 figures of tax. The travesty of it all is for a lot of people that could have been avoided. There's places, it seems like it's forbidden fruit and it has to be left there untouched until its final purpose is met, but that's not the case. You can move them, you can put them into registered accounts. There's a lot of things you can do to shelter them from tax, and so it's heartbreaking when you meet somebody where that ship has sailed and that tax bill is already looming. But even in that situation, when you have the capabilities we do, there are things you can do. There's Section 85 rollovers. There's a way you can defer tax and solve the problem of having that big looming bill and a bunch of shares in one company sitting in the wrong place.
And that's a great place to end because it brings us full circle to the beginning of the conversation when we said, if you are a high income person and you're making some good money now is the time to start talking to a wealth advisor because they're going to prevent you from encountering those problems down the road, right? You don't need to wait until you have a huge bank account to get proper advice. Now's the time to do it.
No, and frankly, you shouldn't. A lot of the cases I was just referring to are people who waited too long, and it wasn't until they had this big, enormous problem that they finally had the impetus to reach out and kind of get some advice. So you hit the nail on the head, Brian. I would say anybody with ambition, anybody with income and kind of a growing pool of wealth that they're trying to manage. It's something I know well. I mean, there's a lot of complexity that comes along with buying a home, with starting a family, with all the different life goals that you kind of hit along the way. But I would encourage people honestly to do two things. I mean, seek advice, but one thing we didn't touch on, which I think is a really important message, don't just focus on investments. And I see this time and time again. I see people talking about returns. I see people focusing on their portfolio. And of course that's important. People want to earn a good return on the money they've saved. But it's the tax planning, it's the strategy, and it's having a plan that you're actually following that I encourage people to really reach out and get some good information on.
Thanks, Jerome. Thanks, Sham. Well, we covered RSUs, tax cliffs, and all sorts of other things today. And if you feel a headache coming on, well, that's a sign that you've outgrown your current strategy. So subscribe to the channel, or even better, stop procrastinating and book a free call using the link below. This has been Tech Money Smarts with Novel Wealth, and we'll see you next time.